Hey there, and happy 4th of July from Northern Michigan. As promised, today I have a very unproduced, some might even say half-assed video for you, as I've been on a pretty aggressive vacation over the past long weekend. There's a lot that's been happening over the past week that should be covered, developments in Ethiopia, Afghanistan, and other places, but it's kind of hard to speak meaningfully about those developments with very little research. There was a headline this morning, however, that grabbed me and gets right to the heart of the subject matter that this channel covers, and that is the oil price. The headline this morning was that oil prices had reached 6-year highs. This is pretty important for this channel. Over the years, I've made some pretty strong predictions based on the fact that oil prices are now lower for longer, and that the growth in demand, if not demand itself, is falling. And the prices that people are going to be able to command for their petroleum resources are in a sort of permanent lower state. Since 2016, I've been predicting that lower oil prices would lead to a dramatic decline in terrorist acts worldwide because the Gulf countries, our U.S. allies that fund most of those terrorist actions, simply didn't have the spare money to fund them anymore. And that has largely happened. Since 2017, I've been pointing out that I believe the Saudi Arabian political system, as it currently exists, will collapse by 2030. That hasn't happened yet, of course. I still believe that to be the case. But all of these predictions that I make are sort of reliant on a falling oil price. So the fact that we are currently hitting 6-year highs in the oil markets, or at least we were this morning, would seem to indicate something that might undermine a lot of the predictions that I have made. Well, there's a few ways to quibble with that. The first would be to point out that a lot of this is tremendously dependent on certain political alignments that are unlikely to last. The reason that the United States has been able to so vigorously, enthusiastically sanction countries like Iran and Venezuela is because oil prices were so low. And if we really were getting to a point where oil prices were regularly, a barrel of oil regularly costs, somewhere in the $80, $90, $100 a barrel range, then those sanctions on Iran and Venezuela would probably go away fairly quickly. These are not sanctions that are put in place because of any real threat to the United States. It's because they make sense for certain political calculations in the U.S. So if we really got to a point where we were worried about oil supplies, it would actually be quite straightforward to lift sanctions against Iran and Venezuela, allow those sources of petroleum to go back onto the market, and it sort of acts as a governor on prices. Beyond that, there's much more complex ways to go into this. There's a Bloomberg article I was reading this morning talking about the delicate dance between the UAE and Saudi Arabia. Apparently, if you believe some narratives of what has happened already on the oil market just today, this morning at the open, they were at 6-year highs, and now both Brent and WTI seem to be down 3% on the day, which is a pretty large fall, and that is because of conflicts between the United Arab Emirates and Saudi Arabia over what the appropriate timeline is to up supply. So I think it's important, I guess my first point would be that it's important to realize how inhibited and how constrained supplies are simply by politics at this point. And these are political transitions that can change fairly easily and fairly quickly. Another very key point to make is that the headlines this morning were talking about 6-year highs in oil prices, not 7-year highs. The crash in oil prices did not begin in 2015, it began in 2014. So even this morning, we were talking about record highs of $76, $77, $78 a barrel for oil. Not the kinds of prices that we used to see before 2014. Prices for a barrel of oil in the 80s, 90s, or even in the three figures, in the hundreds, and at the highest points getting into the 120s. We're nowhere near there, and I think that's worth pointing out, the fact that we did just finally, after 6 years of supply constriction after the United States has literally dropped its production by 2 million barrels a day. We're still nowhere near to prices that we were in 2014, 2013, 2012. So I think it's there's this famous, not famous, but from my perspective, and I think the savvier perspective, it's there's this famous short-termism for people looking at oil prices. It's important to traders and journalists to be like, OMG, oil prices are so high because they went up by 3% today or what have you, and this lack of willingness to compare it to the true historical data. And I think that's sort of what we're seeing today. Everyone's so excited about, 6-year highs, even though the high that they're reaching is a point that oil had fallen to after a crash in prices. That's an important point. But the third, I think, and probably the most important thing to talk about with this spike in oil prices that may actually be happening, even though I've spent the video thus far minimizing it, the important thing from, my very selfish perspective is actually I predicted this, if it's what's actually happening. I'm not sure if that made sense. I'm not sure I'm particularly capable of making sense after the weekend I just had. But to sort of clarify what I'm talking about, I'd like to refer to a video from 3 years back where I talked about how a large spike in oil prices is probably inevitable. After watching oil prices fail to skyrocket for the past 4 years, I think Wall Street is probably going to pull the plug. Oil companies will be expected to show returns, and U.S. oil production will plummet, which will lead to, wait for it, a spike in worldwide oil prices. For the past 4 years, the usual exploration and development just hasn't been happening. All sorts of exciting new oil locations have been found, but understandably, folks haven't wanted to build out projects that need oil to cost $70 to $80 a barrel to be viable. The world really has come to rely on that extra production from the United States. When Wall Street decides to end the party, I think a short-term supply shortage is very possible. That's right, I am talking about oil costing more than $100 a barrel again, but only for a short time. This time around, it won't be some exciting new oil extraction technology that kills the oil price. It's going to be something completely different. Electric cars. After being a sad joke for decades, electric cars are finally poised to make a big difference. Every large car maker seems to be coming out with new models next year. There's one massive problem though: price. At current oil prices, you don't actually save any money by buying an electric vehicle. The other problems are technical ones, like range and charging stations that will quickly be fixed by a mass market. But we won't get a mass market if it's cheaper to buy a gas guzzler. Electric cars are waiting on a big bang. The post-shale surge in oil prices will be the electric car big bang we are waiting for. Once the mass electric car market starts, a fall in oil prices won't actually matter. The volume of cars sold will drive innovation, and oil won't be able to keep up. By the 2030s, oil should cost around $20 a barrel. And that is how the oil market dies. Or maybe not. Since I made that video 2 years ago, a lot of things have happened that I would not have predicted. Like, COVID. But I'm pleased, actually, when I look back at that video, and I'll link it at the end of this, by how much has held up. I think the basic structure of the prediction remains true. Wall Street did, in fact, get sick of funding the shale market. The shale market seems to have been probably a little more durable than I would have expected. But yes, we have gotten a drop of 2 million barrels of oil in U.S. production because Wall Street has gone on strike as far as funding shale producers goes in the United States. The COVID catastrophe has obviously had I feel folks say that it's really accelerated everything by 5 to 10 years, whether we're talking about technology, whether we're talking about stock markets and investing more generally. And certainly that's been the case in the oil market as well. We actually saw negative oil prices for a couple periods, just one period last year, which was kind of mind-blowing. Things have gone nuts, but I think that my predictions that I made in that video, How the Oil Market Dies, have kind of held up to a fairly strong degree. The question that I'm wondering right now is like, is this run up in oil prices that we're seeing now, like, is it that last one? Is it the one that is going to be generated by the collapse in investment in new sources? Is this the one that's going to really cement, solidify electric cars as the primary means of transportation all over the planet? Are we there yet? I'm not sure. I mean, this could just be, as we're seeing in a lot of asset categories, a brief run up in prices before things go back to the normal trend, and then perhaps that sort of oil industry killing spike in oil industry prices is still a few years off in the future. I'm not sure, but it could be what we're seeing right now. And I think that's kind of a fascinating thing to think about, and a good video that I could do without having to do too much more research. It's been a while since we've talked about the oil industry on here. Definitely have a video I want to make about how the oil industry and its evolution, interacts with the current Saudi Arabian government system, and how that's going to work out. I have more complex thoughts on that, but those are more complex thoughts than I can get into on a day like today after a vacation weekend. But I've gotten my Tuesday video done. I'm happy to say that. If you're interested about developments in Afghanistan and Ethiopia, as I most certainly am, I will be talking about them at some length on Saturday in the patrons-only newscast that I do every month. It's a week late this month. But we'll definitely be diving in on Afghanistan. We'll definitely be diving in on Ethiopia and what the Ethiopian government's defeat in Tigray actually means. We'll be doing that in the patrons-only newscast on Saturday, and then we'll be back, hopefully, to normal produced production next Tuesday, where I'll hopefully be doing my third and final crypto video. But we'll see. We'll see. Thank you all for being here, and happy 4th of July.